Hello everybody, welcome to the last minute top tips for the CFA program exam. My name is Peter Menzies and I am a CFA program instructor and for Fitch Learning, very happy to presenting to you and hope that you get something useful out of this presentation that we have for the upcoming Level 1 program exam, of course on that first Saturday of December. Now, myself, I am a charter holder. I do have my own experiences of the Level 1 exam, but also having trained for so many years now, over sort of 10 years, I, like many others in Fitch Learning, have sort of brought together what we think are the best things to remember as you get into that last month before the exam. So that's really what this next presentation is about. Everything that we've learned ourselves over the years and what people have fed back to us, the common pitfalls, if you like, of the exam. Now, first thing is just a little content of what we have here. The information session will cover the calculator. That's of course key to get the best out of the calculator for the exam. Want to make sure you know all of the functionality. Strategy. Yes, ahead of the exam you must know what to expect and how you're going to plan your time going to that date. There are some crucial formulae we'll talk about you must know. It will come up, and if you're not quick on it, you will lose time and, of course, maybe not finish the exam. Tips for preparing to avoid unnecessary stress. Basic things, your travel arrangements for the day, making sure you have all your materials ready in advance, knowing exactly what those materials need to be. And practice exam questions, the most important point is that you do a lot of practice. We have questions in the presentation. You see how sharp you are. They are exam standard. Okay, so we'll have a look at some fixed income and some accounting questions. Now, the first thing is, as I'm sure you know, but just in case you didn't, the exam is essentially 6 hours on that first Saturday in December, but 2 papers spread in the morning and the afternoon, 3 hours each. So from 9 to 12 and from 2 to 5 o'clock, you will have to sit 120 questions, and that's 3 hours. So as you can work out there, 1.5 minutes a question. And every topic is covered, and every question is standalone, and every question does not have the danger of negative marking. So you can see it's a fair process, as in what do you know across the range of topics, and you're not penalized, of course, for guessing, essentially, right? And also, there's no sense of you get one wrong, then automatically get the next one wrong, right? So that's good. It's a fair exam, but it is a case of course, doing all of the questions in the allotted time. You must watch your timing. Now, we talk about time trap questions where you can spend too long on something and then, of course, end up not giving enough time to others. That's just too bad. Bad time management, so it's something to watch out for. Now, in terms of the first tip, it is know all the relevant functions of the official calculator. So, I mean, the official calculator, whatever yours might look like, but, the official calculator, Texas or Hewlett-Packard, whatever it might be, you need to make sure that you know the relevant functions. So, for example, time value of money, right? So, TVM, let's have a check, guys, TVM buttons there. We're talking about making sure you have all the functionality, N, periods, IY, of course, yield, PV, payment, right, future value, all of that, which I'm sure you've knocked off so many questions now, you know all about that. But remember clearing and reusing that again and again. Clear your calculator by pressing second FV. ICONV, intricate conversion. So this is where you are looking at comparing or contrasting, effective rates, nominal rates, effective rates. So go back and forth again, nominal versus effective, which, of course, that's crucial in terms of, some of our questions. I'll show you an example with fixed income where you have to be able to work out the nominal rate on a, so shall we say, a comparable effective rate. You have to work out what the nominal rate will be if you want to keep the effective rate constant. Data, right, so you're doing your stats, you're doing your any kind of, variance or, working out standard deviation. Then you've got to input your data, and then you can calculate the stats. So remember, the data sheet is pressing that second button, number 7, if you're using the Texas calculator. Second 7 gives you the data sheets, and you enter your X1s, X2s, right? And then the stats that you calculate from that will be things, of course, like your means and your standard deviations and your sigmas, and so forth. But remember, you must have the setting in one variable mode. If your calculator is in any other setting besides one variable, you must change it to one variable mode by pressing second enter when you enter the stat function. There's no other setting you need but one variable mode. NPV and IRR, okay, it's changing topic, guys. That would be using the cash flow function. Using the cash flow function, so CF, go into the cash flow function, enter your cash flows, CF0 and then CO1, so forth. Press enter. And remember, NPV, you look at the present valuable cash flows, you have to enter a discount factor. And IRR would be the NPV is 0, what rate leads to that. Amort, well, guys, talking about bond accounting and lease accounting, you want to know what the various features are from the amortization function. You press the second PV button, access amort, and you can access things, all of the key features such as, what is the balance at the end of the year, what is the principal that's been amortized, what interest expense has been charged. So I love that. That's going to be such a good time saver. Why do a manual calculation when you can just use the function? Right? Break even, that's going to come into corporate finance. So operating break even or just break even quantity of output. And you can use, of course, your function again. So second 6 gives you the break even function. There you enter the fixed cost in total, the variable cost per unit, the price per unit, and of course setting that you want the profit to be 0, and then just compute the quantity. So compute Q, and I think that's great. Obviously you have no need to use any formulas again yourself manually. If you want to clear any of the settings, basically from icon down to break even, and clear any of those settings, when you go into the function for the first time, you press second clear work, and if you want to clear the time value money buttons, you press second future value. So I hope, guys, that is something that you already know. Get the most out of the settings. Use the calculator efficiently. Now, tip number 2, question practice and time allocation are crucial. You've got to, guys, outline, earmark, I should say, 2 weeks at least, where you are able to just give yourself time question practice. I feel you'll learn so much through that process. You don't need to do reading upon reading upon reading again. In the last 2 weeks, you should really be doing question practice and seeing your time allocation. You will get better, of course, as you do more exams. And, the time allocation is 1.5 minutes a question. Read the requirements first. What does the question need you to do? And don't get bogged down in time trap questions. In my opinion, questions like ethical standards, it's going to be, a case of maybe 3 minutes, perhaps, to read an ethics question. Maybe answer correctly or not, right? There's no exact science with those. So don't get bogged down whereby you end up spending more and more time on, say, ethics, and you then, of course, have to squeeze in and rush the rest. Be strict with your timing. Move on. Leave to the end if you need to, right? Because it's still worthwhile mark each. So I should say the presentation that we have here is going to last about 35-40 minutes in total, guys, in case you're wondering the timing of this one, about 35-40 minutes, okay? Now, what I also note here is getting the best out of the calculator. That's absolutely key. So what we see here, the question which comes from, we see study session 15, reading 53, LOS F. If you're snappy with all that stuff, then this is the fixed income reading on fixed bond valuation. What else really? Bond valuation. So this is an example of how you can look at a question, and it can take you maybe 5 minutes, or it can take you 1 minute. Here we see they give us information about comparing annual yields. The annual yield, the APR, is a nominal rate. So you're basically comparing nominal rates from bond A to bond B and saying, well, does it give me the same effective return? The formula is here, if you recognize, is about effective returns. So an APR for M periods is going to be equivalent to an APR for N periods. Let's say APR M represents a semi-bond, semi-paying bond, APR N, a monthly bond, a monthly payment bond. But the two are equivalent if they give you the same effective return. How do you work on an effective return? Well, you first divide the nominal rate by the number of periods. So we can see that's what they've done here. Divide by the number of periods per year. And then you compound by the number of periods per year by raising it to that factor. So this is basically saying they would have the same effective rate. Now, a way of making sure that is if they give you an APR for M periods, you could say, all right, well, firstly, let me work out what the effective return is for that bond, right? And then you can try to then work out using roots and multiplication what the normal rate would be for another periodic bond, but the same effective return. But it would be, I think, a little bit long-winded. And also unnecessarily complicated because we have an icon function, don't we? So here's an example where we have a 6-year 4% bond, price 103.21, and future value 100. The bond's yield to maturity has been told to us as being 3.404. Now, you could work that out, guys. If you want to check that, you can check that. That's going to be if you compute the IY and then if you double it. So this basically is the semi-annual IY times 2. If you want to check that, that's what you get. But they've told you that. A trader has been asked to convert to a monthly periodicity. Under this conversion, the yield to maturity is closest to. Now, what do we do? Well, basically, 3.404 is APR for 2 periods. It is also a nominal rate. Right? We don't know what the effective rate is, but we know the nominal rate. So what we could do is say, firstly, work out what the effective return is, keep that, and then recompute a nominal rate based upon a bond which is, paying 12 times a year. So how do we do that? So guys, onto your calculator. If you go to the icon function now, okay, so second, number 2 for me, and here I enter the nominal rate. So nominal rate should be for the current APR2 bond, right? Let's get that down, the APR2 bond. And we write in, yes, APR2 nom is equal to 3.404. We enter, guys, that's APR2. Then press the up arrow, number of compounding periods. Automatically, it probably is saying 2 anyway, but if you want to just put 2, enter anyway, just make sure it is saying that. 2, enter, yeah, 2 periods. Then up arrow, right, the effective rate, compute. I'll just do that 1 second. Right, so how about this, guys? We've got 3.433%. Notice that is one of the answers. If somebody wasn't paying close attention, might think, well, I've got the answer, it's option B, move on. They haven't asked you what the effective return on this bond is. They're asking what the equivalent monthly bond would be yielding you. So for there, we have to say, okay, let's go back to the number of compounding periods. Let's put 12. Let's put 12 in there, right? And now, come back to the 12, okay, enter. And now, come back to the nominal rate. And you're recomputing for a 12-period bond. Okay, so recompute for that. Now this is coming to, how about, guys, 3.38%? Is that coming out, 3.38? And 3.38 is APR 12. But as you can see, APR 12 of 3.38% versus an APR 2 of 3.404, both give you the effective return of 3.433%. In that case, we have the top formula saying they have the equivalent effective return. What are the APRs which give that? Right? You've now got it. So how'd you like it, guys? That's actually option A, isn't it? That's option A. That's how we could use the calculator in a smart way. Hope that's okay. Now, the biggest topic, of course, in the exam is FR&A 20%. So we need to make sure that you understand questions coming up like here will be so key for passing the exam. It's a comparison on cash flows, how US GAAP and IFRS will categorize something. You can see as well the reading and the laws and everything it comes from, but comparing cash flows. Now IFRS gives the company in question a choice. Got to be consistent with your choice, but you have a choice. Whereas US GAAP, there's one right answer. It's strict. Okay, so here we go, guys. Let's see what we remember here. The key thing is if you start with IFRS, first thing to remember is all of the following about interest paid, received, dividends paid or received, the cash flow from these items can always go into CFO. That's the first thing to remember. So we can have CFO for everything. Because obviously if it's a regular part of your operating numbers, right, regularly in the income statement, and I guess you could say it's revenue related, and it's in the operating then. It needs to be in operating. So, right, interest paid, CFO out, dividends paid, right, interest received, dividends received. But, choice. If it's not something which is so ongoing, perhaps better to place it where logically you think you should place it. I mean, interest paid and dividends paid is a financing thing, isn't it? You're paying down on your finance. So surely that could be better placed at CFF. CFF. So again, CFF out. Whereas interest and dividends are, of course, on investments or assets, aren't they? Your assets are giving you these things, and fixed assets. So surely, logically, you'd say CFI. And that's how it works. But US GAAP, strict, one place. One place, typically, is CFO. I say typically because for interest paid, received, and dividend received, it's all CFO. So interest paid, of course, CFO out, CFO in there. What's the odd one out? Right? The odd one out is, guys, this one. There's the one, the trick. Cash flow from financing is, out, is the place where US GAAP requires us to place dividends paid, in the sense because it's a discretionary payment. Issuer does not have to pay dividends to its shareholders, and so when it pays it, it's not revenue related, it is a total financing decision purely, so it goes into financing. But that's a nice odd one out, isn't it, to test you on. So do watch out for that, everybody. Watch out for comparisons like that. Now, again, because it's such a key area, we should be able to answer questions about cash flow. And here's another example of how you can arrive at a question quickly, or an answer quickly, or you could spend ages and waste time. So here, analysts have gathered the following information about a company. And you can see they give me lots of numbers, guys, lots of details which I could waste my time looking at. But I should really read the question first. What is it you want me to do with these numbers? All right, so I'm going to read the question. Under US GAAP, what is the cash flow from financing? So you want CFF, but you want US GAAP, which tells me that if there are any specific choices, I need to make sure they are US GAAP, decisions. If there's any difference with IFRS, okay? Now, because they're explicitly saying US GAAP, I'm going to be using US GAAP rules, right? Definitely. If they hadn't said it, then essentially I should imply it's IFRS, because usually you imply IFRS here. But US GAAP specifically, okay. Now, then I start just looking for my financing numbers. Now, agree, guys, dividends paid, as we've just said. I need that number. It is done. Common stock issued, do I need that number? Yes, it's a financing number, surely, yes. Now, both of those are important. Now, equipment purchased, scratch that, isn't it? Because that's going to be a CFI number, don't need it. Bonds issued, yes, I need that one. Take that one. Fixed assets sold, what's that to do? Fixed assets, guys, that's a CFI number again, don't want that one, so we'll ignore that. Account receivable, inventory decrease, accounts payable, wages payable, blah, blah, blah. All of that surely is CFO, so I don't need any of that. You see? So, in the end, I'm pretty happy with just focusing on these numbers and knowing the rest of it. I had to make sure, of course, but I don't need to read any further. You see, there's even like information about how much you sold and how much was the book value, and that's entirely important for CFI and for profit and stuff, but not irrelevant for this question. So again, that is just a distractor. In the end, as you can see, all I need is the bonds, 160, the common stock, 40, subtract the 60 that you have. Of course, a dividend payment is, of course, going to drain the cash flow. So 160 plus the 40, take off the 60, and I guess, guys, we're going with 140 there. But just being quick, they'll point that example just to show you don't waste valuable time. They will throw in distractors, irrelevant information, to waste the time of somebody who's not really sharp on the day. So please make sure you look for all your shortcuts. How's that, guys? Well, I hope that's okay, all right? Now, top tips. Make sure you know how a topic will be tested. Because when you read the learning outcome statements, which as we do, we try to make sure we put these sort of little, reminders. We also say, well, make sure you know what the command word is. Is it saying explain? Is it saying compare? Is it saying calculate? Because very often in CFA 1, you're not asked to calculate. The majority are narrative, comparisons, and impacts. So you really are very, going to focus more on that. So know how a topic will be tested. Do not waste time on learning formulae that, of course, they're not going to be tested, because again, you will then know the command words. An example which comes to mind is when you're looking at, in statistics, you look at mean, variance, okay, we've got to calculate that, right? But skew, kurtosis, basically tails, is there a tail and how much area in the tail? Now, I have to understand what positive negative skew means. I have to know what excess kurtosis is, but I don't need to calculate any of that. I need to describe what is a leptokurtic negative skew. What does that mean? What is a platykurtic positive skew? I need to describe this, but learning the formula would be a waste of time because it's not coming up. So that's the idea, guys. Don't waste time and focus on the LOS command words, because they write the exam questions exactly on those LOS command words. LOS, guys, learning outcome statement, yeah? So well worth the time to check that you know what the LOS is telling you to do. Now, we have some, so jog your memory here, key formulae examples. Okay, so guys, these are things which we just say, do you remember these? Okay, firstly, portfolio standard deviation. Just a reminder, it has to be only for a 2-asset. Okay, in portfolio management, just 2-asset portfolio standard deviation is required. And, it's really about making sure you remember that you've got your weights, your weighted averages, and your weighted average is basically of your variance, because variance is something that you can add together. So we're adding our weighted average variances using squared weights. And then remembering to put in the covariance section and say covariance is going to look at the relationship between the 2 assets, risk and return. How do they co-vary? Do they enhance or do they dampen each other out in the portfolio? And just talking about covariance, you can see we need to be able to work out all of that. So beta, correlation, covariance. So just jog your memory, see what you remember about that. Okay, it's all, essentially, do we need to know? But yes, covariance between the asset, let's say asset I and the market, divided by variance of the market. Yeah, correlation coefficient, covariance between 2 assets, say A, B, divided by the standard deviation of A times the standard deviation of B. Okay, hopefully, jogging your memory, guys. You remember these formulas. And covariance, as we've just mentioned, is going to be something we need, but you can also calculate as correlation. In fact, yeah, you can calculate from correlation, or even just from, as I think you generally would need it, so correlation times standard deviation times standard deviation. That, of course, then can be used as a substitute in the portfolio standard deviation formula. So, something like that would be perfect. And, if it comes to things like, well, what about duration and convexity and fixed income? Well, you do need to learn, guys, approx. Okay, remember? Approx modified convexity, because there's no calculus in the level 1 exam. There's no calculus. But you must know your shocking rates up and down, and you're going to be able then to work out from that, right? So that was a key formula, really, however you want to write it, to be fair. But the change in the value, divide by 2, times by the initial value of the bond, times the change in y. So basically saying, look at the overall change in the bond value and average it out. That's going to give you a prox modified duration. And Macaulay, of course, you can then get from a prox by simply multiplying by the periodic yield. So usually to go from modified to Macaulay, it's just multiplying by the periodic rate, 1 plus r. And you might have to do that. But that, of course, is the linear movement in the bond price. Convexity approximations, well, yeah, I mean, you might have to do that. But in my opinion, more likely you have to utilize convexity in a bond duration example. Say, well, what is going to be the adjustment that you need to make? So just remembering, guys, when you want to do the percentage change in the bond price, just remember this formula as well. Minus sine next to duration times the change in yield. So basically to show it's an inverse effect, but it's also the first order effect. And the second part is half times the convexity times the change in yield squared. It is, guys, half convexity, and the yield change is squared because it is a second order effect. So using it is, I think, even more important for convexity rather than calculating convexity directly, in my opinion. CAPM, as CAPM has got to, you've got to have CAPM, don't you? So the expected return of the portfolio is based upon the risk-free rate plus beta of the portfolio multiplied by the equity risk premium, which of course is RM minus RF. So saying beta is a weighting against the risk premium that there is. So you need to be giving that extra return on top of the risk-free rate, or get that return. If the markets are efficiently priced, you should receive that. The Gordon's growth model in equity, right? As I'm sure you're remembering your stuff here. P naught, the price today, based on D1 over R minus G. Remember, the price in the Gordon's growth formula is always one period before the dividend used. When it comes to the weighted cost of capital, the WACC, right, we should remember we're taking the weight of debt times the cost of debt times 1 minus tax plus the weight of equity times the cost of equity. Now, how the key theme here is, of course, that the cost of debt is tax deductible, cost of equity is not for issuers. And the weights and the costs will come from usually market values and market numbers. But remember, you've got various models there, especially for cost of equity. You can use CAPM, you can use a rearranged dividend Gordon's growth model. Yeah. Market weights can be used for the market value can be used for the weights, or you could use a target ratio given to you by the issuer. Accounting ratios, well, guys, for that one, really, it's like if you use accelerated depreciation, if you use straight line depreciation, what's going to be the impact on key ratios? So look at the tables that you'd go through there. Look at the key things like turnover, profitability, so like ROE, margins, right? And see, is it going to, it's like more depreciation is going to lead to lower profits. Lower profits means usually worse margins, so forth. And so just saying higher, lower, or maybe the same in some cases, because maybe like it's a cash, it's a cash flow item which is not affected by depreciation. And then following on, guys, DuPont analysis, ROE. I'm sure you're familiar, guys, with this one, but remember, this is taking the earnings after tax versus your sales, so your margins, basically. Sales versus assets. And finally, assets versus your equity. And just saying, of course, they're cancelling like terms, but seeing that ROE is driven by all of those factors: margin, turnover, and leverage. Because cancelling like terms there, we get back to EAT, earnings after tax over equity, but seeing what's driving ROE, and they love that stuff. So you must be able to, rearrange and find out if they give you, say, margin and turnover and the ROE, you can work out the leverage, or they give you the three components, you can work out the ROE. So play around with that. That's absolutely a favorite, I think. Okay, top tips. Don't focus on your favorite topics at the expense of your weaker ones. I mean, the point that we made earlier was that the level 1 exam will probably give you a chance to go at everything. You'll get a chance on every topic area. You'll get you're not going to get all your best topics or also all your weaker topics. So we always say aim to score, 70% or better on 100% of the topics, because therefore you will pass. You will pass. There's no point mastering one topic and then bombing two other ones. That's pointless, because you will fail. Right? You will not get a chance to just get all your favorites, all your weaker ones. So get a good stand on everything rather than an excellent stand on some things and a poor stand on the others. Now, make sure you know the weightings. We'll see that in a second. Allocate your time study accordingly. I mean, generally, if we just take a look at those weightings, actually, you can see the biggest weighting, and I'm sure the one that most people spend most of their time on, even though it's 20%, you probably spend almost half your time on it, because there's so much detail in the accounting. And rightly so, you should spend your time here, because that's where the difficulty is, and where they really split up the passing and failing candidate there. Ethics as well, in my opinion, is another key factor, because it may be only 15%, right? But still 15%, and if you do badly here, it's very hard to make it up elsewhere. Those two take ages to master, in my opinion, right? Read the curriculum books for ethics, read the CFA's Institute's Volume 1 books, go through all their examples that you are comfortable with their wording and with their analysis, because your exams will be based upon the examples from the Volume 1 material. So there's no way you can ever miss that out, no way. You should be doing the questions for all the topics, but especially reading that in the CFA curriculum is key. Quants, as you can see, there is the next biggest, but that one can be handled with a calculator so efficiently, as we've been seeing. So knowing all the functionality, then of course you can look at the narrative on top of that, but you can save a lot of time there. And once you master that, you've then got things like asset valuation topics, equity fixed income, becomes a piece of cake, because you know how to efficiently use the calculator. Once you've done bond valuation, of course you're ready to look at cash flow valuation in corporate finance. So these start linking and linking. That's great. That's what we need. So you can see, as you learn and you build up your knowledge, how things start to flow. On the other hand, there are topics such as derivatives, which, if you're not really very familiar with derivatives, you could spend much more proportion than 5% of the time. You spend a lot more than 5% of your time on derivatives mastering it, and yet it's not worth a lot. And the trade-off is in level 2, it's worth a lot more, but level 1 it's not. So you've got to be wary. Derivatives is taking me a long time. Is it worth me trying to go overboard on it? Not really. So I'm just going to do my best on it and move on. Make sure everything gets a fair chance. Okay, Ron, so I hope that makes sense. Now, like I said, do not underestimate ethics. Do not underestimate that, because it is the hardest section, in my opinion, in the exam. It is the hardest section, because you're never sure if you got it right. So the only way to get some level of confidence is to practice every question you can find. Make the links. Start to get the story in your head. It takes months. I hope you've already had a chance to go through the examples a few times, and these last month or so, you can just refresh and go over it again. Make over the old questions. As I kind of mentioned already, don't overlook the CFA program curriculum books. I mean, even at this stage, they're excellent for questions if nothing else. Attempt all the questions at the end of each chapter. For ethics, of course, you heard me say it, look at all the examples. Because, of course, I mean, it's an excellent set of questions, and the difficulty level is as good as, if not harder than the actual exam. So it's the best way to prepare, really. No? Now, seems simple, but you must make sure you know what the material requirements are for the exam day. You cannot take pens, guys, to the level 1 exam. You're writing in pencil, HB pencil, because your exam must be scanned by a computer. So as you can see the picture here, you're basically taking a pencil and you're filling in the ovals or the circles, which are for the right answer response, A, B, or C. It's a 3-option exam, so A, B, or C filled in. When you're filling in, you've got to make sure you fill in fully. Don't leave any white or any spaces. Right? So that's important, because you change your mind. Oh my goodness, get the rubber out. Make sure you rub out that answer properly. Your numbers not filled in at all, and move on to the answer which is proper. So you must, these things are little stresses. If you understand what I'm saying, these are little stresses which can make things more difficult. The best way to prepare for that, of course, is to do a mock exam where you have to do this. So, for example, with Fitch Learning, we do run live exams where we say to our guys, come in, we'll give you the same mark sheet, we'll give you the pencil, you just have a go at just answering is one thing, but then making sure your answer sheets are nice and neat and clear to read for a computer. Otherwise, what's the point? If you can't read your questions, the answers, you're not going to be able to get any marks. Now, the calculator, you have to take your own calculator. There's no borrowing calculators at the exam. Take a spare one, in course, just in case the battery runs out for some shock reason. Shouldn't do, but you never know. Take your ID, passport, and typically a printout, of course, of your registration email, your exam ticket, I should say, your exam ticket. Take a printout of that. So these things. Now, read the rules, right? The exam center rules. Wherever you're sending the exam in the world, make sure you know the rules. You have to be there on time. You've got to, of course, register in time. At least an hour before the exam, really. You should be registering with the exam. So if you're late, you can imagine world of stress. You'll be having to wait outside the exam room. You will have lost exam time on the rest of the audience there. So that's terrible. So these things, guys, are key to plan ahead of time. And perhaps the last key tip has got to be, seems sensible, but keep your energy levels up, guys, during the final few days. I mean, you want to burn through questions and analysis and do as much work as you can, but the last day or so before the exam, wind down. Because you've got to be physically ready for the exam day. It is a huge drain of your energy, 6 hours and all the stresses. So, the Friday before the exam, just, plan what you're doing, get a good night's sleep, and if you're, whatever happens, just remember you've done the hard work over months, and so all you need is to have the energy to show what you can do. So make sure you do that. Now, in terms of final bits, guys, if you want to access more material from Fitch Learning, then we do have packages available for you which will maximize your chance of program success. I mean, what I like here is that it's just exam-style questions and summaries which can only help in the last month. So from Fitch Learning, you can see we have what's called the online review package, which has full access, right? You've got access to recordings of trainers or tutors, instructors, going through all the readings. So, of course, what you could do is just watch the bit that you want to watch. And there'll be lots of examples and explanations. Final Countdown Guide is a summary of formulae and facts, tables, which are great, actually great the day before the exam, in my opinion. You're winding down, just look at the Final Countdown Guide and say, yeah, I remember that, yeah, I knew that, yeah, I knew that, okay. That's the best you can do the day before the exam. Mind maps, summaries, just basically saying how topics connect together. But then exam-style questions and mock exams. Surely that's the most important thing for you, is exam-style questions and mock exams. So you've got plenty of those, thousands of exam-style questions. Mock exams, you've got 5 full mock exams, and basically that's 6 hours times 5. Absolutely good. That's going to be great. On top of the ones you get from the institute, right? You get free exams from the institute. You take that anyway. You get 5 from us, and our answers are thorough, so you can learn from those. I have a question here saying you can't bring in scrap paper to write calculations working on the. That's true. You can't bring in scrap paper at all. You're expected to write down your workings on the question paper. That's right. You don't write anything on the answer sheet clearly, but you can scribble as much as you like in the margins, on the blank pages, on the back pages of the question booklet, as much as you like. You know, that's really where you can write all your workings. But just to go back to what we're saying, if you want to just purchase the mock exams, fine. You've got 6-hour mock exams, let's say 5 of them, online, accessible. In person, yes, if you want to come to, if you have access to one of our training centers in the world, you know, we have the Middle East, we've got the Far East, we've got, of course, the US, we have centers in New York, etc. So if you want to come to that, you can do, and just try out one of the exams over a 6-hour process and see what I'm talking about with the, you know, Scantron mark sheets and stuff. And we'll get you your, you know, your result back to you within a few days after sitting it. But it's all about really you yourself having access to lots of good quality exams across all the topics. And you can learn from your mistakes, can't you, during that period? Okay, so I guess last bits, guys, is just what for you now to do is, if you are interested in any of those packages I was talking about from Fitch Learning, then, you know, so the Americas there you go, contact the relevant person, and I wish you all the best with your studies, because I remember how much work it takes while for any of these levels, CFA program levels. Do your best. Remember, the hard work, I'm sure you put in already. You just need to finish off strong and smart. And that's how we'd say to you, these top tips, hopefully you understand what that means. I wish you the best luck for the exam, guys. If any questions, of course, happy to take that. But if you're okay, then we're going to close up now, and I wish you all the best, and I'll speak to you soon. Bye for now.